In progress.
Hey everyone, welcome to episode 230 of the Your Money Your Life podcast. We do this every week. Make sure you like, subscribe, 5-star rate, and review the podcast because we will be here every week talking about the news, personal finance, investing, any topics relating to finance, and sometimes personal life as well. So we'll jump right into it this week. First and foremost, let's take a look at some of the market dynamics. There hasn't been a lot of news. There's been some earnings, but there hasn't been a lot of news so far. The market's kind of been about flat to a little bit higher. If you take a look at the chart over the past week, though, we're about a little bit lower than flat over the past week. Past month up 3.5, a little bit under 3.5%. A lot of that's been driven by the AI surge, tech stocks, the big magnificent seven driving stocks forward, and some data. We're gonna get data Friday. We're gonna get more inflation data on Friday. We'll also have that data consists of the May's personal consumption expenditures price index. Say that 5 times fast. So investors are going to see if pricing pressures are easing with this report for consumers. Again, mega tech cap names are outperforming this year. They're outperforming, all the big tech stocks, all the mega cap names are really doing well, having a strong year. Nvidia, we know, has had a really, really strong year, as well as all the other big names. Maybe not as strong as Nvidia, but they're all having strong years so far. AI is driving a lot of this hype. AI, artificial intelligence, is the buzzword of 2024 and will be for the next foreseeable future. And so a lot of people are wondering how that plays into valuations, how that plays into companies that will outperform based on AI. Still to be seen, but a lot of that hype and a lot of the momentum is driving the markets forward right now. And there isn't really much to hold the markets back because we are seeing better inflation data. We're seeing consumers and an economy that's still standing up relatively strong. So I mean, it's really going to be more news that comes down the pipeline. Initial jobless claims edge lower. So again, stronger data for the consumer. So we did see Walgreens reported a plunge in profit guidance and a challenging consumer environment. So Walgreens said that their fiscal quarter was, short of expectations, but they also believe that the rest of the year will be challenging for them. And so their shares plunged 14%. They're saying that we assumed in the second half that the consumer would get somewhat stronger, but that is not the case. That's Walgreens CEO Tim Wentworth. He added that the consumer is absolutely stunned by the absolute prices of things, and the fact that some of them may not be inflating doesn't actually change their resistance to the current pricing. So we've had to really get keen on particularly in discretionary things. So he's pretty much saying, although inflation's slowing down, people haven't adjusted to the price increase that happened over the last 2 or 3 years, and they're that the company, Walgreens, has to be really strategic on how they price things, especially discretionary, because someone walks in and sees something that they usually buy that was a discretionary throwaway item, and it's way more than they bought 2 or 3 years ago. The price is way higher than it was 2 or 3 years ago. They're now rethinking that purchase versus what they anticipated. So that's pretty strong data about like what the consumer is feeling right now, and I would say that's accurate, actually, really, really accurate. The last 2 or 3 years of inflation, even though now this year and a little bit of that back half last year have gotten a lot better. 2020, 2021, 2022, really, really strong inflation numbers, and it's compounded, right? So those prices don't go back down to where they were at 2019. They just move up slower, right? So that's inflation in a nutshell. So we'll keep an eye on Walgreens. That's an interesting data. I just thought it was interesting data points. Again, we looked at the chart over year to date, 15% on the S&P 500, over 15%. Again, another strong year. And you see people are quiet because it's a strong year. And that's what the market should be doing, is just giving steady returns over time. It's not supposed to be some hype mania craze to try to make $1 billion. Again, you're not going to make $1 billion trading money. You can gamble, that's your prerogative, but your time is better spent doing other things to earning cash flow. But that's what's been going on with the market so far. Let's take a look at news. So YouTube is streaming's true king. So Netflix may wear the crown, but YouTube is the real king of streaming. CNBC reported that Nielsen data shows that YouTube led the streaming pack in May, making up roughly 10% of all viewership on traditional and connected TVs, besting Netflix 7.6%. In fact, it has been the leader for 15 consecutive months, and more than half of viewership now happens on traditional TVs. The big question for streaming rivals is whether to leverage YouTube as a partner, fight it as a competitor or do both. So this is interesting. I've actually found myself more into YouTube over the last couple of years. Really, really a big YouTube guy before then. But of course, this is also placed our podcast episodes are placed on YouTube. I can watch certain things on YouTube, whether it's catch podcasts later or stream, old, boxing matches that I wanted to watch or different things that I want to learn about, right? Like different combat and martial arts that I'm learning, whether it's boxing or different areas. So it's really, really rings resonates true to me. I think YouTube and Netflix are the two top. They're battling out, it seems like. And it was an interesting point on this. They also mentioned that viewership is actually happening on traditional TVs, which is makes sense. Like I watch some of it on my iPad, right, which is YouTube, but also I have that YouTube app on our TVs, right? So I watch YouTube on TVs every once in a while as well. So hopefully you guys plug this into your TV to watch this episode as it drops, so you can see me in 4K right in front of your living room. Please do and send me a screenshot of doing so when you do it. But that's interesting data. We'll keep an eye on that. Amazon is taking aim at rivals. So Amazon, of course, one of the biggest companies in the world, they're planning to launch a new section featuring cheap, unbranded items shipped from China. So this move is Amazon's most aggressive response to popular bargain sites like Temu and Shein. So they're battling against Temu and Shein, which are bargain sites that ship from made super cheap in Asia, shipped to the US, and they're lower prices because they're just made super cheap, made potentially less quality items, but they're made really cheap. And they're shipped here. It takes a long time. I think I've got some off of Temu once or twice. But point of that being is Amazon is now realizing that, hey, they're eating some of our market share up. How do we combat that? Let's create our own Temu and Shein on our own site, and combat these competitors that are eating up some of the market share. I love this idea. Makes sense. You have to have a high moat, a high barrier of entry. I was thinking about the barrier of entry for different companies recently. Like if you think about Amazon, like how hard would it be to create another fully logistic, worldwide company that ships you pretty much anything you need in a matter of a couple of days? Like the capital, the logistics, the strategy that's needed to do that is damn near impossible, except for these bargain sites that are doing it super cheap. So maybe it's not impossible, but it's a high barrier entry because Temu and Shein I know have had a lot of capital backing, and they're just doing it with much lower pricing, right? And so that's one of the ways. There was another company I was thinking about it, but it slips my mind. But the barrier to entry, when you're one of these big mega cap companies, you try to create moats where competitors can't even get in, and that's one of the things your advantages is to create a space where other people can't come in and take market share. So really, really interesting. We'll see if that works. SpaceX, another company that's Elon Musk led, they're planning to sell shares for $112 each in a tender offer, which will put the value near 210 billion. Remember, SpaceX is a private company, so they do this. That figure is a record for American private company. They do this in the private markets, selling shares to different private funds, maybe individuals that have a lot of capital, and their valuation, the after investment valuations are going to be looking to be near 210 billion, which would put it a very large number for a private company. I don't think Elon Musk plans to IPO this company, meaning do an initial public offering, take it to the market, because it will put them under a lot more scrutiny versus being just a private company and they're building. I don't think they make any money, obviously, right now because it's a company that's supposed to send rocket ships to wherever, to outer space. It's right now that figure is a record for American company and positions SpaceX as the world's second most valuable startup behind TikTok. I guess TikTok is technically a startup. Parent company ByteDance, just a huge valuation. So interesting enough, what you're seeing with private markets. Remember that was such a huge thing back in 2021, where everyone wanted to invest in the private markets. Now it's changed. People are realizing that it's not just invest. It's build cash flow and understand what you're trying to do. It's really, really important. So the NFL's Carolina Panthers, and the Jacksonville Jaguars score taxpayer infusions as stadium subsidies grow. So it's really confusing when you have a stadium, like a stadium that your NFL team plays in. They do a mix of their money and a mix of taxpayer money, which is kind of crazy to me. Yet taxpayers have to pay for a stadium to be in that city state, but I guess it brings jobs to that city state, so maybe it balances out in the end. But Anyways, the Carolina Panthers secured 650 million in public funds this week to renovate Charlotte's Bank of America Stadium. That's half the 1.3 billion expected cost to upgrade the nearly 30-year-old facility. The Panthers ended last season with the worst record in the NFL. Hopefully, they pick that up with Bryce Young at the helm and some other key pieces. We'll see them do some good things. And speaking of which, advisors group going incredibly well. Of course, New Street Sports Agency just kicking off incredibly well. We have some great young kids now on to do NIL partnerships with us, and it's just so much exciting things for the sports agency and advisors group. Things really kicking off well in 2024. So we'll keep you updated as usual. Back to this though, the Panthers. So economists have said that stadium subsidies don't provide a net economic benefit for the surrounding metros. This practice doesn't look to be letting up, though. So that's what I was just explaining. The taxpayers have to pay for this, but then they're supposed to get a net public benefit by the jobs being brought to these areas and different things. But it's people are like, hey, why do I have to pay for this new stadium when you're a billionaire that owns this team? It doesn't the math isn't mathing for a lot of people out there. So Kansas officials last week passed a law that would help cover 70% of the expected 3.5 billion cost of new stadiums if the Chiefs and Royals moved from Missouri. Wow. In Cleveland, lawmakers are considering 600 million in state funding for a new stadium for the Browns. That would amount to 12 times Ohio's record for state spending on a single pro stadium project. Taxpayers have spent 30 billion on stadiums since 1990, but researchers have said that the projects often pitched as investments in jobs and growth haven't resulted in notable ROI for taxpayers. A 2021 New York analysts analysis of the state's 850 million stadium subsidy for the Buffalo Bills said the largest revenue source from the deal would come from income taxes paid by teams' players. That's incredibly interesting. So they're saying like, hey, this is, you know, not that great for the consumers or people, but the biggest benefit is that the team's players that are there, they're paying taxes, state taxes. So that's like the trade off. It makes no sense. But that is what they're doing. We'll keep an eye on that. That's actually interesting for those that are into sports and into finance. Car dealers are forced to rely on pen and paper after cyber criminals strike another corporate target. Oh, this is interesting. So I did see something about this car dealership hacking. But it seems like about 15K car dealerships across the US and Canada are stuck in the slow lane following a series of cyber attacks last week that knocked key systems offline. The attacks targeted CDK Global, the company behind the software dealers rely on to process everyday transactions like sales, repairs, and parts orders. Dealers have switched to spreadsheets, pen and paper, typical, slowing operations and creating a backlog of transactions. So they got hacked, and now they're switching to pen and paper in olden time days to process transactions. So not good. Ozempic maker Novo Nordisk is building a new 4 billion factory in the races to meet global demand. Yeah, I'm not a Ozempic person taker out there. If you need it for health purposes, I understand. For someone that uses it for fat loss, do you? But yeah, I'm hearing some about the side effects that are crazy and not great for everyone, for people out there. And there's been some lawsuits that are being passed out, but some people use it. A lot of people use it. A lot of celebrities use it. You can never tell someone else what to do, but you can learn from others' mistakes. The NBA draft was yesterday. First round was really exciting. The first pick was someone that was a little bit of surprising for Atlanta Hawks, but what a day. 30 names called in the first round. There'll be another 30 or so names called in the second. But really exciting. It's actually happening here in Brooklyn, New York. You got to love New York. Always the city that never sleeps and the city that has a lot of things happening. A lot of things happening. Let's jump into questions of the week. There's a couple cool ones, couple interesting ones, and ones that I think quite interesting. The first one being, is it better to pay off your credit card balance over time or all at once? I don't know if we did this one before. We might have, but of course we know the answer. It's all at once, if possible, using cash flow. Very possible. So good one there. How much do Americans spend on lottery tickets each year? Okay, so let's break this down. Americans spend a lottery ticket. It's got to be. I know it's in the high billions, close to a trillion, right? I would say 500 billion. Did that sound right, folks? 500 billion spent on lottery tickets each year. Okay, 113 billion. I was way off. It's way too high. 113 billion spent on lottery tickets each year. Of course, the lottery, if I'm not mistaken, is actually a government operation, meaning the state operation or federal in some cases. And so that's another way for the government to get, billions of dollars in revenue, but they also pay out obviously for the winners. So net net, they're still making a lot of money from this lottery, which is preying on, our dopamine effect for gambling. So of course, for people that do so, nothing wrong with it. Just know what you're doing, and don't get locked into it. Um, Interesting. Two good questions. Two good questions, folks. Remember, we have do this every week. We want to make sure that people are locked in. Share this with your family and friends. We have a lot coming up for New Street Advisory Group. We have seminars next week for the New York Public Library. We have a lot in the month of July, early August, and then back half August. Of course, I'll be out of commission for a couple weeks as I take a much needed vacation, and honeymoon, and then we're back at it in September. Of course, we'll be doing this every single week, and I'll get the schedule for us in early August, since I'll be out for a bit, for a couple weeks due to vacation, personal time. But get the schedule for the podcast. We'll make sure maybe I'll record a couple so people have and hear my voice every week like they have been. Make sure again you share this with your family and friends. You get the news from us, you get the personal finance tips from us, and we'll always keep this going. Talk to you next week.